Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the trading setup and the market strategies for the day. The Nifty is heading into this midweek session on the back of choppy weekly expiry, which actually ended with the index moving in neither direction. It is the banking index, however, that continued to sway the index with it. The Nifty bank's outperformance on Tuesday ensured that the Nifty's downside was also capped. Also, even as most IT and FMCG names, they continued to tumble in trade. It was the auto stocks, however, that kept up with the upbeat sentiment surrounding the sector, and they remain another focal point as well. But more than the autos, it's also the auto ancillaries that are now showcasing significant outperformance on the back of huge demand that the sector is looking at now in the festive season. Now, what is the trading setup like as far as the overnight trade is concerned on the Wall Street? It's taken a breather amid the slide in big tech stocks now. Additionally, Federal Reserve Chair Jerome Powell has also signaled that the rate cutting path was not very clear and that it was a challenging situation at this point in time. So we did see that the S&P 500 ended about half odd percent lower in trade. The Nasdaq Composite fell by about 0.9% in trade. The Dow Jones also rose by about 0.2% in trade. What happened in the Asian markets this morning? They've opened largely on a lower end. This was following the losses on the US markets. We've checked that Nikkei was just down by about 1.1% odd. South Korea's Kospi index, however, edged up by about 0.2%. Now, when we're looking at even the GIFT Nifty futures, they're trading about 63 points higher in trade, now at 25,180 odd levels. So let's see how things really pan out in trade. We've again seen that the FIs have remained net sellers into the Indian markets. 3,551 odd crore rupees is something that they've sold off yesterday, with the DIIs buying about 2,671 odd crore rupees as well. Of course, we'll be looking at a lot of stocks that are in news, brokerage houses radar, and of course, a lot of macro news as well. But let's first welcome our guest on board. Mr. Avinash Gorakshakar joins in to share with us his views on the markets. Warm welcome to you, sir, and thank you so much for taking the time out. I want to first begin by understanding from you, how are you looking at this increased amount of volatility in the markets, even when the sentiments back home in the domestic market on the back of festive season, on the back of GST cuts is pretty high? What do you think is leading to this extreme amount of volatility in the markets, sir?
See, I think market volatility is a function of a lot of factors. I think global, kind of outflows from the FIs, the currency factor,
Yeah.
and most importantly, markets are now looking at, quarterly earnings. Hopefully from the second quarter is going to be much better than the first quarter. And hopefully, these GST cuts are going to get reflected in the October to December kind of numbers. So I think till the time the market does not come out with any concrete, number, specifically on the corporate results front, and plus how the FIs react, because that is one factor which has been pulling down the market quite significantly.
Yes.
And as I've been earlier telling Sakshi to you in your shows, that the primary market is witnessing extreme amount of supply liquidity. I think,
Absolutely.
in the next 10 days there are something like 28 new IPOs which are going to raise
Hmm.
money.
Hmm.
So that is also another factor which is increasingly putting volatility on the secondary market. So I think we'll have to wait for these factors to subside. And I think eventually, the markets would balance themselves. But I think definitely structurally we are positive. We are hopeful that even Donald Trump could give us some good news by the time Diwali comes. And that, I think, markets could definitely look at it as a kind of a good re-rating trigger going forward.
Okay, got that. So, Avinash ji, since you also did point out that the earnings recovery is going to be extremely crucial for the markets to now see for the next leg of recovery, do you think again this quarter the numbers will start trickling in, within the first week, first fortnight of October onwards? This quarter is going to be likely still, continuing to be a projection of weaker sentiments, and only one will have to wait for, like you pointed out, the October to December numbers to finally reflect the impact of the GST cuts.
Yeah, I think in terms of numbers, actually, you may not find any big positive surprise, because the GST cuts, the rate cuts, the monsoon impact, all these the things are going to get reflected properly in the third quarter. I think we have already seen Hyundai and Maruti reporting record number of sales, on the first day of Navratri. And I think this is definitely going to follow up in the third quarter, because clearly, I think, in the second quarter, margins could definitely show a decent improvement. But in terms of the profitability impact, I think the market should be awaiting for the management commentary, is the outlook which these managements would share once the Q2 numbers are out. So I think the commentary will be very important. because once that is understood and communicated by the companies to the markets, that will be a good trigger point for many companies which are expected to do well.
Okay, fair point. Avinashi, we'll also look at how the markets are indicating again a weak start for the Indian markets right now at 25,090 odd levels. So there is an indication of a 93 point of a further downtake in today's trading session as well. That brings us closer to the 25,000 mark as well and risks that level, on the downside again as well. Avinashi, do you think a large part of the good news on the back of these GST reforms is also in the news, and therefore with the absence of any fresh triggers, there could further be a risk that 25,000 could be tested on the lower end?
Yeah, exactly. You see, I think the GST impact has been partly discounted. Of course, when earnings come in markets and the analysts will upgrade or downgrade their earnings estimate going forward. But I think the bigger trigger is the import tariff issue. I think there are strong indications that possibly, by this Diwali, some good news could come in. And if that 50% becomes 15 to 20%, I think that is going to play a very big sentiment booster. That would obviously change the mood of the FIs. My sense is that, domestic funds have been buying, but I think FIs have been continuously selling. Like yesterday also, there was a big sell-off number.
Yeah.
And considering the kind of supply from the primary market, I think we'll have to wait for maybe another couple of weeks or maybe a month, because many main board IPOs are also lined up, which are very large just ahead of Diwali.
Okay, fair point. So near-term volatility could continue on the back of all these issues that we've discussed. But global investment banking giants are now turning bullish on over the next 12 months as far as the Indian stock markets are concerned. We have a report from HSBC that has now upgraded Indian stock market in its latest note, saying that they are now changing the rating of India to overweight from its earlier rating of neutral on Indian stock markets. The upgrade also comes in just 8 months after the company had also downgraded Indian equities in January, citing a lot of slowdown in growth amidst high valuations, which had limited upside potential. Now, the tide seems to be turning when HSBC has pegged Sensex target over the next 12 months at 94,000, which actually implies a potential upside of over 13% from yesterday's close as well. So that's something that we are looking at. So Avinash, for somebody who's been looking at the Nifty and the Sensex have potentially given very flattish to just meager returns in this year so far. Over the next 12 months, when global brokerage houses are turning positive, how should one really strategize if somebody is a long-term investor on their investments right now?
So I think, see, the outlook for the next 12 months definitely appears to be quite promising, considering the fact that, this year monsoons have been much better than expectations. The rate cuts have happened. More importantly, I think the macros are getting better and better every day. So I think, there are sectors which are going to be benefited from the GST cuts significantly. Like you mentioned earlier, autos, auto components,
Yeah.
typically agrochemicals, even the consumer durable, consumer, consumption kind of, companies. So definitely, I think this is a good time to accumulate. See, whenever the markets go volatile, investors should look at this volatility as a positive kind of development, because you get good companies at lower valuations at lower prices. And the benefit of low price definitely results in a better alpha if one has the patience to hold for the next, say, 12, 18 months. So definitely, in these sectors, there is an opportunity, but I think one has to keep a fair amount of timeline, because I believe this market will not remain the way it is once the September quarter numbers are out. And I think we get some clear indication from the import tariff issue.
Absolutely. In fact, you did talk about the auto space. Let's discuss that in a deeper sense. We have some brokerage houses reports as well. Remember, Maruti Suzuki, the largest listed car maker, has actually hit record high levels as of yesterday. Goldman Sachs, on the back of that, has further upgraded Maruti to a buy rating with a target price that they've raised to 18,900 on the stock. They believe there are many factors that could lead to an upside from here. A potential pickup in the market for entry-level cars cars post GST cuts, resumption of new model launches after a gap of over 2.5 years with Victoris SUV plus the E Vitara as well. They're also talking about favorable exposure to pay commission in the upcoming auto demand cycle as well. Remember, that's the 8-pay commission that we're talking about. Relatively low, CO2 risk versus peers heading into the CAFE 3 regime by FY28 estimated is something that they've also penciled in. Same way, Goldman Sachs has also come out with a report on Ashok Leyland, where they have actually downgraded the stock to neutral with a target price of 140, and they say that they see limited upside after the recent rally, and they believe the thesis around pickup in the mix towards higher tonnage vehicles and improvement in the margin environment for commercial vehicle industry is now more accurately reflected in the current stock price as well. So they do see limited upside for Ashok Leyland, but they are bullish on Maruti Suzuki. Avinash ji, help us understand, how are you looking at the opportunities within the auto as well as the auto parts segment as well, and what appeals to you more at this stage?
So I think within the auto pack, all the large players will benefit. Of course, Maruti, Hyundai from the passenger car space. We also like Mahindra and Mahindra, from the utility and the tractor space. So this is also another good, interesting opportunity. And of course, from the commercial vehicle space, we believe that Tata Motors is now slowly moving up. The demerger has also been announced between the JLR and the domestic business. So I think, we have to take a SIP approach. I think these stocks should be accumulated, in the near term over considering the medium term opportunity is positive. And auto components, I think we are very positive. We look at companies like Ask Auto, Sundaram Fasteners, Bharat Forge, Uno Minda. These are companies where I think investors should keep a watch, because these are large players. And I think the benefit of GST cuts for the OEMs is going to trickle down for the auto component players also. So I think net, auto is in an attractive spot. Maybe the January to March quarter could be a very good period, because typically October to December is a period where people don't at least December is a period where people avoid buying vehicles because of the number plate issue. But next year is definitely going to be good, because one will get the full impact of the GST cuts, and obviously consumption will be much more stronger.
Okay, fair point. I hope this has also helped a large part of our viewers as well to understand how to look at this entire space. Let me also ask you, Avinash ji, to spread this further and help us understand your thoughts on the other segments of the consumption space. Talk about consumer durables, FMCG, staples, discretionary, both, maybe even footwear companies, retail giants, e-commerce players as well, e-marketplaces. How are you looking at the opportunities there on the back of GST cuts? We're already looking at how most of these companies are looking at a record demand because of the GST cuts over the next few days in the festive season.
Yeah, I think companies from the footwear space, companies from the retail space, or maybe from the FMCG pack are definitely going to do well. In fact, FMCG is one sector which is going to benefit significantly. And I think this time the best part is that monsoons have been good, the whole demand is good, and plus with two rate cuts and obviously with a lower GST, I think you're going to see a lot of companies like Marico, Godrej Consumer, Dabur, Hindustan Unilever. These are companies where I think you're going to see a strong volume growth. But as I mentioned to you that, you got to take a very stock specific view. These companies are not cheap. They are fair to expensive. And I think one has to be a slightly patient investor here. But I think Dabur, Marico, and Godrej Consumer could definitely be looked upon. I think definitely a very good risk reward. And I think, even the consumer appliances company, something like a V-Guard could be looked at. I think these are also companies which would benefit significantly from the GST cuts.
Okay, fair point. We'll definitely keep that in focus as well. I wanted to also, take our attention to the food delivery space, especially Swiggy, because that's in focus in today's trade. And that's after Swiggy has sold its entire stake in Rapido for about a 2,400 crore rupee deal as well. This stake has been sold to Process and to Westbridge Capital. Remember, Rapido has recently also entered into the food delivery business as well. This move could be the biggest deal that we are seeing in 2025 into the startup world, in the unicorn world as well. And this move could strengthen Swiggy's focus into its core business of food delivery and also of quick commerce as well. That's what we are given to understand. Process is going to be investing about $250 million as fresh capital, and Westbridge covers the rest. We are also given to understand that Rapido leads this ride-hailing market with about a 50% market share there. And now Swiggy is set to make 2.4x return on its 2022 investment of 1,000 odd crore rupees that it had done in Rapido as well over the last 3 years. Your sense of how are you reading this development by way of understanding what it means for Swiggy and its shareholders, Avinash?
No, I think definitely a good positive development because whatever cash comes in is going to be utilized for the core business, and I think Rapido was just an investment, so I think they got a good kind of upside from this investment which they made. See, most importantly, for most of these food delivery app companies, I think it's only going to be the volume throughput growth which markets are going to monitor in the near term. I think from a longer term perspective, the best part is in the food delivery app, market. There are only two large players, Zomato and Swiggy, and then I think Zepto is yet to go public. So I think it's going to be a very competitive space. Only companies which have got a large balance sheet, a capacity to take, losses in the near term are going to survive. So I think longer term, Swiggy will definitely survive. But yes, this news is positive. I think in the near term, you should see a good bounce with today's trading session.
Okay, let me actually highlight some of the brokerage houses reports on the back of this deal that have come in today. Morgan Stanley has an overweight rating on Swiggy with a target price of 450, and they believe, as per the company, this proposed transfer will actually help them create an efficient and more focused entity for the quick commerce business, and that's why they're positive. Nomura also is positive on Swiggy. It has a buy rating and a target price of 550 as well on the stock. They believe monetizing of Rapido investment to raise 24 billion rupees is positive, and corporate restructuring of ownership in Instamart, that's the quick commerce business, is going to be seen as a positive as well for the company. So we'll keep an eye out on that. But Avinash, between Swiggy and Zomato, how are you looking at the opportunities there? Should one go ahead and have an exposure to both, or do you think should one choose one over the other? How would you look at the valuations part and the opportunities that lie ahead?
See, my guess is that Zomato looks better positioned compared to Swiggy, and I think Zomato has firmly established its presence. It's done a good amount of balance sheet tightening, profitability focus has come back. So I think somebody who's got a 2 year kind of time frame should look at this as a big opportunity because see, in the food app space, habits are changing, lifestyles are changing, and today I think Zomato and Swiggy are becoming a essential daily part of the younger generation. So definitely, I think somebody who's got a slightly longer term kind of conviction and time frame could definitely look at putting money on the Zomato stock. But yes, I think it's not a short term call. Only over the next 2 years we could see profitability, cash flows coming back in the positive. And I think once that happens, I think it's in a quasi monopoly business. So that gives it a significant competitive edge, in the market.
Absolutely. Let's shift focus to the markets. Viewers, a few seconds later, we will see the markets open. Right now, the Nifty is settled at 25,108, a 60 point of a downward tick, but thankfully above 25,100. We'll see how it pans out. Right now, we are given to understand it started about a 25 points lower in trade, so slightly better off than what it settled in the pre-open. 25,137 for the Nifty right now. We also have focus again on the auto basket. Look at Maruti Suzuki again driving up, as the top mover on the Nifty, 0.4% higher, followed by names like Geo Financial Services, Trent, Ultratech Cement. Those are the names that are higher in trade. Among the sectors, you have PSU banks that are ticking higher, in the session today, right in the open, about 0.5% of a move on the positive side. This is despite the fact that India VIX continues to soar higher. About 0.5% of an uptick can be seen on India VIX as well at 10.6. But broader markets are also taking the baton in their hands. You can look at small caps and mid caps that are showing us some ticks, but rest of the sectors are all down, especially led by the IT pack that's down by about 0.2% in trade. Even the autos are now slipping away, seeing some profits being taken off, 0.5% lower. Financial services, consumer durables, FMCG, pharma, all looking weaker at this point in time. Only the PSU banks are gaining some strength, and leading the rally from within this space is SBI now, the second mover from top as far as the Nifty movers are concerned. Trent is now higher. Adani Group stocks are back in focus. Adani Ports is higher by 2/10%. You also have Apollo Hospitals from the healthcare pack that's also taking higher. Let me also pull up some of the top gainers as far as the Nifty 500 names are concerned. We have names like Minda Corp from again the auto ancillary space that's driving up higher. Brokerage houses have again started to come out with fresh reports with higher targets on Minda Corp. That is reflecting in the price, 7.5% higher for this one. You also have names like even Blue Coast Hotels, the smaller ones that are hovering up in trade. You also have Ismo Limited that's up and about in trade as well today, and a few such other names that are actually hovering higher. So we'll just come back to it once the markets gain some pace in the broadest index. But PSU banks ticking higher by almost a percent now. Yeah, there's a sharp move on the higher end. Let me actually pull up some of the PSU banks then to see where exactly the momentum is coming from. Indian Bank, UCO Banks, Central Bank of India, you have Bank of Baroda, PSB, State Bank of India, all the PSU banks up by over a percent is what we can see at least at this point in time. What's happening in the PSU space? Do we have a name, in the defense space? Yes, we do. We have Hindustan Aeronautics, that's 2/10% up. We have BEL that's also taking higher, but let's also look at the shipping space that garnered some move over the last couple of sessions, likes of GRSC, Cochin, Mazagon Dock. These all stocks are again back in focus as well. The advanced decline ratio still, viewers, is on a 1:1 basis. So even Stevens on that account as well. Avinash ji, how do you see the opening in the markets, and how do you see this profit taking across the board?
No, I think we will have to face this volatility, Sakshi, for some time. But my sense is that as the events play out, I think markets at 25,000 are definitely not cheap. I think markets have achieved this level, but further incremental kind of upside will depend on the earnings growth trigger from the corporate result season for Q2, and obviously from global markets, as I mentioned to you. So I think till then this volatility will continue. I think you're going to see selective buying, selling happening in both the large cap and the mid cap stocks. But I think this is a good structural opportunity for investors who want to now enter the markets at lower levels. You will get good companies at lower prices, which actually helps them construct a good portfolio, for the next 12 to 18 months.
Okay, got that. Let me also welcome our other guest on board. To track technicals, Kiran Jani, Head of Technical Research at Genum, is now joining in on the program with us. Hi Kiran, warm welcome. Good morning to you. Tell me, how are you looking at the markets at this point in time? We were discussing about the extreme amount of volatility that we are seeing from last couple of sessions, and the markets facing resistance at higher levels. I mean, 25,500 has again remained elusive for the markets by way of sustaining gains, and now we are actually inching closer to 25,000 once again. That's despite all the good news that we are seeing in the markets from the domestic realm. A huge amount of consumer demand, festive spirits that are in the air, and we are looking at even brokerage houses globally turning positive on the Indian markets, yet we still face a lot of resistance at this point. What would you say?
Very good morning, everyone. So, yes, definitely domestically, we are not seeing any such kind of a negative news, but we can see some of the negative news from the global, and because of that, we are seeing volatility and headwinds at higher level. Number one. Number two, after giving 1,000 point of rally from 24,400 to 25,400, Nifty or any given stock, it tend to give some retracement. So this retracement is going. So if you look at this overall 1,000 point rally, there is a 500 points of retracement, which is a 50% retracement. Number one. Number two, there is a double bottom pattern breakout on Nifty on daily price chart, which has breakout level somewhere around 25,100 to 25,150. So that level is going to be a crucial, and it is as a technical, definitely it's considered as a retesting. But we need a confirmation. As of now, there is no confirmation. As of now, Nifty is breaking his yesterday lows also. So we have to be a little bit cautious, but looking at overall chart pattern, 25,000 remains very strong psychological support. With that, if you look at the monthly expiry data, 25,000 put writers are holding maximum open interest also. So there are very good chances we can see some bounce from 25,000. So the suggestion or the advice would be somewhere around people can or the trader can go long on this dip. So the accumulation level is range of 25,000 to 25,100. The market is going there only. You can go long on index also. Also, you can go long on selective sectors like auto, like pharma, or even a banking stock. Just be skeptical or a little bit cautious on IT sector. Don't do any bottom fishing on IT, but we are very much optimistic on banking sector as of now. So for Nifty, you can go long at current market price, keep a strict stop loss below 25,000, and this expiry remains in between of 25,200 to 25,300 for sure. Coming to the Bank Nifty is fairly strong. Even yesterday, we can see that Bank Nifty has given a very good closing on daily price chart. However, on daily price chart, if you look at the prices has a resistance of its 150 days moving average. So until and unless market is not closing above 55,500, there are chances we can retest 55,000. So for Bank Nifty, any fresh long should be wait and watch for the level of 55,000. If you get any dips toward 55,000, you go long. Keep a strict stop loss below 54,800. If market is not breaking 54,800, then for next month at least and Diwali month, we can expect Bank Nifty to touch 56,500, 57,000 for sure. So we are very much bullish on Bank Nifty, but wait for dip to accumulate.
Okay, fair point. Let me actually look at the markets yet again. Avinashji, how are you looking at this PSU bank move? We've been seeing from last couple of weeks that PSU banks have started to pick up pace. They lied low for a large part of this year so far. It was the private banks largely that pulled up the Nifty from the lows of the year. But PSU banks are starting to move up. Is there a news brewing, or do you think the tide is finally turning again? Should one keep their focus on PSU banks at this level? Are they better placed than the private peers at this juncture with the valuations in place? How would you look at it, sir?
No, I think PSU banks definitely look attractive. I think if you look at banks like Bank of Baroda, Canara Bank, PNB, SBI, see, I think investors should realize that whatever GST cuts the governments have announced, a lot of credit demand is going to come from the banks. And I think the government also wants the transmission effect to now get reflected so that the customers benefit, from the lower kind of GST rates. Most importantly, a lot of buying of cars or for that reason consumer durables, appliances actually happens via the bank funding or maybe the NBFC route. So typically, I think October to December could be a period where we could see a good push up in the credit demand. And obviously, with higher volumes, you could expect better numbers. In fact, in case of Canara Bank, they're planning to even sell, a part of their equity for their AMC business. So some value unlocking could go there. So I think Canara Bank looks most attractive, followed by Bank of Baroda. So I think keeping a time frame of 6 to 12 months, I think this could be a good time to accumulate select PSU, stocks.
Okay, got that. Let me also look at Kiranji. Why don't you also help out with any names that you'd like to track within this same space?
So if we talk about the Bank Nifty, PSU Bank is doing very good. In within the PSU Bank, SBI has given a fresh breakout, so you can keep watch on SBI. Buy on dips would be the strategy. We have seen that the SBI has a steep resistance somewhere around 840, 850. Now the stock price is 873. No doubt the overall market structure is little bit weak, and we are trading into the lower top, lower bottom pattern. To use this opportunity to accumulate SBI at lower level somewhere around 850, 860, keep a strict stop loss below 840. And overall, the way SBI has given a breakout from the ascending triangle pattern, there are very fair chances we can touch 920, 930 kind of a target in upcoming time. So SBI looks very much promising. Last time when we discussed last Wednesday, we discussed about the Axis Bank. If you look at the Axis Bank from 1100 to 1160, stock price has crossed this all important moving averages, and straightforward from 9 September to till now, the first time Axis Bank is trading into the lower top, lower bottom pattern. No doubt on the intraday price chart, the momentum indicator into the overbought zone. So there are chances some retracement will happen. Within this retracement, any price dip towards 1150, 1140 would be the great accumulation zone. Keep a strict stop loss of 1120, and we can expect price target of 1200 in upcoming time. So Axis Bank and SBI are the very good chart setup at current market price. Definitely buy on this would be the strategy for the both the stocks.
Okay, got that. In fact, viewers, there is some kind of a buzz that's also getting us to understand that there may be a proposal from the government. Nothing official has been made yet, but there could be a thinking process that the government may be planning to increase the foreign investment in the public sector banks. Currently, the limit is 20%, and the government wants to strengthen these banks, and this could help them. raise more capital, and the government could continue to remain, the owner with about a 51% stake. This also ensures the banks remain public, and the goal is to actually make them globally more competitive. There's also another thought process that more consolidation, more M&A could be in the offing to strengthen these banks going forward from here. So those are some, buzz and some news flows that are coming in, of course, from unconfirmed sources and from reports, but we'll keep an eye. Maybe that is one trigger that's keeping these stocks in focus. Avinash ji, apart from the PSU banks and the sectors that are directly, seeking the benefit of GST cuts, what else is appealing to you in the markets? Where are you focusing your attention?
So where I think good investment opportunities are there. I think companies like Ask Auto, which is a auto component player to the two-wheeler pack, very strong numbers, and we are expecting even the September quarter to be very solid. So I think Ask Auto can definitely be acquired. Another agrochemical company, Sharda Cropchem. I think the first and the second quarter for these companies is supposed to be a bumper quarter. The first quarter has already been strong, and I think with a good monsoon, hopefully the second quarter also should be good. So here also, I think there is a good opportunity. And the third stock, which we have been telling our clients to buy, is a workspace company called EFC India Limited. They have a seat capacity of roughly 50,000, which would go up to 75,000 in the next 12 months. Plus, they are now into the furniture making business. So again, a very good investment opportunity for somebody who's wanting a good, alpha return over the next 12 to 18 months. So here, I think probably, there also, investors can accumulate.
Okay, fair point. I hope this has also helped you out. Avinash, before we let you go, please also help us understand something that you were marking in the beginning of your commentary, and that's where the liquidity is shifting to the primary market space with the absolute amount of rush. In the recent IPOs that have started to come in, very difficult to also keep a track, because on an everyday basis we are seeing 4 to 5 IPOs coming in. There are several that have also come in the last week where the listing has been promising. In fact, in urban company, we've also seen investors doubling their money in just about a week's time from the IPO space as well. So they are promising also. How are you picking and choosing from this IPO space, and how are you advising clients on that?
Is that in the IPO kind of rush, it's very difficult to get allotments if you talk to any large or small investor. So I think it's better that investors take a call once the stock gets listed. I think it is like a lottery system. If you get a share, I think you're lucky. If you don't get it, I think you just have to regret. So I think my sense is, we have been telling our clients that whatever is possible from the IPO, you all can apply. A good, prominent main board and good, mid-cap SME companies. But the problem is, I think there are many buyers and very few sellers. It's a situation like that. So I think we've got to take a call post-listing, which I think eventually has got to have a bigger role in the valuation process of the company.
Okay, fair point. I hope this has also given you a lot of understanding there. Avinash, thank you so much for being with us on the program and helping us with all your insights. It's always a pleasure to seek such wonderful insights for our viewers from you. Good to have you with us.
Thank you.
All right, viewers, we'll continue to focus our attention on several stock ideas now with Kiranji. Kiranji, let's try and understand, on the markets, we are slipping even further. Now at the latest low point within the first 15 minutes, we've lost about 100 points in trade as far as the Nifty is concerned. How are you expecting the Nifty to pan out?
See, overall chart pattern looks promising only on larger time frame. But if you look at the intraday time frame or a short-term time frame, definitely this pain remain continue. As I mentioned earlier, also that 25,000 remain going to be a very strong support. Apart from that, if you look at the daily price chart of the Nifty, 25,000, 24,800, 900, there is a moving average clusters are also available. So use this opportunity. I'm again reiterating or repeating my words only. 25,000, 25,100 would be the great accumulation zone. Keep a strict stop loss below 24,800, and definitely this Diwali we will wish each other at 26,000 only. So overall chart patterns looks promising on Nifty. Yes, definitely there are chances we can see some reshuffling on the sector wise. Auto has given a very good performance. So after that, there are chances we can see some profit booking in auto. Apart from that, the sector which we are liking, that one of the sectors is the banking, and within the banking, SBI looks very much promising. Apart from that, on PSU side, Indian Bank, Canara Bank, we have already discussed, but those chart patterns are also looks very much promising. Coming to the one more sector, that is the steel sector, high beta counter. But if you look at JSW Steel, it is trading is all-time high. So any dips towards 1100, 1120 would be the opportunity to accumulate JSW Steel also. And apart from that, Hindustan Zinc look very much promising. The way silver is running, Hindustan Zinc supposed to give a very good rally in short time. So at current market price, you can go long on Hindustan Zinc also. Keep a strict stop loss below 440, and you can expect price target of 480, 490 in upcoming time.
Okay, fair point. The India VIX is further picking up more pace, 1.2% higher now, and the PSU banks have reduced the kind of gains that we had seen in the initial 5-7 minutes of trade. So now you see the PSU banks holding about 0.3% of gains. Remember, it had moved up to almost a percent higher. So they've seen profit taking right at the high point, and now they are trading at the low point of the day as well. So we'll see how it really pans out in trade. Broader markets, anything specific, Kiran, over the mid caps and small caps that you would like to highlight for our viewers?
Mid cap and small cap definitely doing very good. If you look at the market breadth, it is not that much negative. You can see that the large caps are going down, and that's the only reason we can see the indices in on red side. Otherwise, you look at the small cap or maybe mid cap from the OMCs like BPCL, HPCL looks very much good at current market price. Apart from that, if you look at the consumer durable goods like Aditya Birla Fashion, retail fashion, those stocks are also low. Yes, you have to be pick and choose very much, but the overall chart patterns is weak, so we are not expecting to go long on mid cap and small cap, but we want to stay remain with the large cap only. So that is only the advice we are giving. But still, if anyone wants to go on mid cap and small cap, you can look for the this defense company GRSC looks very much promising. Last time also we discussed about the GRSC. It has given a very good return, and now again it is available near the breakout level only. So GRSC looks very much promising at current market price. Somewhere around 2700 it is trading. Go long at current market price. Garden Bridge, keep a strict stop loss below 2680. If 2680 is not broken down, then you can expect price target of 3000 in upcoming time. So again, one more sector which we are liking, that's a defense plus shipping. So GRST is there, Cochin Shipyard is there. So we can go long on such sectors.
Okay, fair point. Let's also look at the defense names, like even the shipbuilder names as well, Kiranji. How are you looking at GRSC, Cochin, Mazagon, even Shipping Corporation of India? Some signs of a pickup happening here. Over the last couple of sessions and weeks also, we've seen some pickup in the defense space, and these erstwhile favorites are coming back into focus. How would you look at the shipbuilders?
So definitely shipbuilders look very much promising. GRSC, as we discussed, looks very much promising at current market price. Keep a strict stop loss below 2650. If 2650 is not broken down, you can go long for some long-term time, and you can expect price target of 3000 plus on GRSC. Now coming to one more stock, there is a Cochin Shipyard. Cochin Shipyard is also given a breakout from the falling channel, or you can consider a triple bottom pattern breakout at 1770 level. After giving a breakout, stock price already tested its high somewhere around 19, 25, 20. Now from that level, it is retesting its support, but overall chart pattern looks promising at current market price. Definitely one can go long. Keep a strict stop loss below 1850, and you can expect price target 2000 plus for sure. So Cochin Shipyard and GRC both our preferred pick. Definitely one can go long at current market price too.
Okay, fair point. I hope this has also truly helped you out, viewers. Let me also pull up a few more stocks. From the consumption-oriented space, let me pull up retail stocks. Trend is again moving up. Remember, it's nearly halved from how it went up substantially in 2024 to now towards the end of the year. It's still almost half of where it was. This entire year has spanned out to be a rather consolidative one for Trent. What should investors do? Those who had built up huge positions in Trent in the last year in hopes that this can continue to drive their profits higher, and those that are accumulating on dips all along hoping that Trent will again come back to its glory days again. How would you look at Trent?
See, overall trend has given a very good return. After that, every stock supposed to go in a time correction zone and a price correction zone. So trend has given a time price corrections already from 8000 to now it is 5000. So we are not expecting some more price correction on trend, but yeah, time correction should continue from September 2024, where prices were somewhere around 8000. Now after a year, prices is trading at 5000. So price correction in within 1 year has been significant. Now overall chart patterns look very much promising. Definitely 4500, 4600 we are not expecting to break in short time. But yeah, apart from that, we are not even expecting a very good return or any a big return should expected on the trend for sure. So there will be the range for the trend. Keep buying somewhere around 4500 to 4600 range. Keep a strict stop loss below 4000 and you can expect prices to retest its high somewhere around 6000 to 6500 for sure. So overall chart patterns remain this type in a range only. We are not expecting any such kind of a big rallies on trend.
Okay, fair point. Keeping an eye out on that too. Let me also pull up some stocks from the broadest index, the Nifty 500 names. Anything interesting here? Dream Folks after a long haul is picking up pace 5% higher now. Let's also look at some of the other stocks. Prozone Realty is up in trade. So smaller names there are definitely pulling up. Your Bajaj Healthcare that's up today. You also have names like Hikal Limited maybe, that's also higher. Sri Lotus Developers and Realty is also higher in trade. So few of the names that we can really mark out and give you any suggestion on at this point in time. But I think auto ancillaries are definitely picking up some pace. Minda Corp, I think, is now 7% higher in trade right now. Any suggestion on Minda Corp or other auto ancillary related names? Kiran, where do you find more momentum picking up?
See, after auto, generally we have seen our auto ancillaries is the late laggard. So yeah, Mindacop is runaway rally, so we are not expecting to go long at current market price. If we anyone having this stock, definitely they can hold with the strict stop loss of 550. Apart from that, Motherson Sumi you can keep an eye at current market price. The flag pattern breakout we can see on Samvardhan Motherson Sumi. At overall current market price look very much promising. Momentum indicator is also on bullish zone. It is trading above its 200 days moving average also. And there is a big ascending triangle pattern breakout we can see on Motherson Sumi. So you can keep a strict stop loss of 105 or 104 and go long on Motherson Sumi. We can expect price target of 130, 140 in upcoming time. So a long-term stock, definitely you can go long on Motherson Sumi.
Okay, got that. I hope this has also truly helped you out there as well. Maruti Suzuki is further now climbing up. You can see a 0.8% of a move on the higher side. It's the top mover now, along with some metal stocks. As Kiran has already pointed out, the metal move in the trade today. We have Trent and Bajaj Finance also that's ticking higher, and of course PSU banks that are also pulling up in trade right now. For somebody who may want to enter into Maruti even at record high levels that they are trading at 16,220 right now, would you advise that, Kiran? Do you see further upside on this one?
See, Maruti overall chart patterns definitely looks promising. So you can enter at current market price also, considering that it has give consolidated while a very long time in the range of 13,000 to 10,000. So there is a breakout level or a breakout target was 3,000, which is already been achieved. So now, if you are going long for the long on Maruti, having a mindset that you will hold this particular stock for at least next for 1 year and keep buying on dips. So at current market price, you buy some small amount of or maybe in installment. Wait for the dips towards 15,000. If you get 15,000, add more. Keep a strict stop loss below 13,000, and you can expect price target of 18,000 to 19,000. Keep in the mind risk reward ratio is going to be a 1:1 only because the price target already been achieved. But because this GST cuts is already there, we already have a the tax cut in individual income on income tax also. So GST cut in income tax definitely will give turnaround story to the all four-wheeler stocks. So Maruti is one of the big. Hyundai is also there. M&M is also giving a very good return. But so on M&M and Maruti, both are going hand in hand. But Hyundai is also one stock which we are on keeping eye. So you can go long on Hyundai also. It is trading somewhere around 2740 to 2750. Keep buying on dips. Keep a strict stop loss of 2600. You can expect 3000 plus kind of a target on Hyundai also. So it has to be preference. You go long on Maruti, then Hyundai. M&M is already there, so we are not suggesting M&M. But one more contra bet on Tata Motor. However, it has not given any such kind of a return. There is a third time Tata Motor is failing its inverted head and shoulder pattern. Now it is trading below its important moving averages also. So that is a very good chance that catch-up rally should come, but we don't know when will it come. But you keep buying Tata Motor, a contra call on four-wheeler side. At current market price, you can go long or any dips towards 680, 670 would be the great buy. keep a strict stop loss of 630, sorry. And if you have a mindset of holding for the 1 year, definitely you will find Tata Motor to flying somewhere around 8,000, sorry, 800 to 900.
Okay, got that. So there you have a market mover on the contra side as well. Tata Motors coming in from Kiran as well. Let me also just ask you on the IT pack, that index which is now dragging the most in trade, Kiran, almost a percent lower. Now, this was the index that had started to move out of its underperformance after a long haul, but again, it is now facing some resistance. How are you looking at the IT pack, both large caps and mid caps? What do you think is the outlook for the next couple of months?
Being technical analyst, we focused on the price chart, and the Nifty IT has given a breakout from 36,200 just few days back. After that, we can see prices has a resistance of its 100 is moving average, and the same day we found there is a news on HB1 visa. And after that, prices continue trading in after a gap down opening, prices still continue in lower top, lower bottom pattern only. During this breakout, we have seen a good setup on TCS also, but now it is again trading into the very bad shape. Infosys is one of the stock which is strong just because of the buyback news possibly. It has given a breakout from the falling trend line. Now it is sustaining also. But there is also a cautious sign because now it has given a breakdown of its all important moving average. Somehow, Infosys has a very good support of 1400. Now the price is 1490. So risk reward ratio is much favorable. You can go long at current market price. There is a gap support also is there. So keep a strict stop loss of 1450. If price is not breaking down that particular level, then we can again expect 1600, 1700 kind of a level on Infosys. So Infosys as of now looks very much promising on large cap side. Mid cap size, you can look at Coforge. Coforge has given a breakout, but again now it is trading into the below its all important moving averages and previous near to the previous bottom. So again here the risk reward ratio is very much favorable. You keep accumulating in the zone of 1500, 1600. Today the 1630 is the level. If price is not breaking below 1500, then you can expect some good amount of rally on Coforge for sure. So Coforge and Infosys look promising at current market price. Definitely you can go long.
Fair point. Okay, let's also look at some of the other aspects. So what else is dropping lower is the consumer durables pack, and we're also looking at real estate also dragging in trade. Now, consumer durables, it's not been a very smart move over the last 1 year, 1.5 years odd or so, but there is hope that this increased festive demand is likely to turn the tide for this entire sector. Your sense, we've seen selective movers from this space so far. We've seen outperformance from Amber, PG, Electroplast, many of these companies, but it's not been a broad-based move. How are you looking at consumer durables, and what is your top choice here?
See, in consumer durable, definitely we can discuss about the Voltas, Havels and everything. But if you look at the Amber is looking very good because आप AC TCS का sorry Voltas का लो या Havels का लो उसका जो compressor होगा वो Amber का ही होगा. So Amber is very good at current market price. Definitely it has given a big breakout on daily price and there is a big ascending triangle pattern breakout is there. So Amber looks very good. We are already holding in our family portfolio, so that is for the disclosure point of view. Keep a strict stop loss below 7900. If 7900 is not broken down, then you can expect a very good amount of rally on Amber for sure. So Amber looks promising at current market price. Definitely you can go long.
Okay, fair point. All right, Kiran, first half an hour of the candle is now nearly formed. Help us understand what's your fresh take at this point in time between the Nifty and the Nifty Bank. Where are you keeping your focus and how would you trade both these indices now?
Overall chart pattern looks promising as I mentioned earlier also. Price is taking support of its previous resistance only. So Nifty has a very good support. For Bank Nifty, we are still hoping or we are still looking prices can touch somewhere around 55,000 or maybe 54,800. So Bank Nifty, you wait and watch. But for Nifty, definitely you can go long in the range of 25,000 to 25,050. Keep a strict stop loss below 24,800. We are not expecting prices to break 24,800. So use this dip and go long. There are a sector like steel sector or maybe Nifty PSU sector, or you can also see auto ancillary sector where you can go long for sure.
Okay, fair point. All right. Thank you so much then, Kiran, for being with us on the show today and, of course, helping us with all the insights that you've shared. Viewers, we'll wrap it up on that note on the edition of Market Today this morning right here. 25,053, 114 points of a downtick. We're trading near the low point of the day and we'll have to see how it pans out. The volatility is high. Most of the sectors have come under the bear grip at this point in time. PSU banks just trying to hold up with about 0.2% of a move, but the rest of the sectors are all down, largely led down by the IT sector today and the real estate, consumer durable sectors as well, and of course some banking names too. Tech Mahindra is the top loser on the Nifty right now, followed by Tata Motors, Adani Enterprises, Wipro, Hero Moto and Shriram Finance as well, whereas only a handful of gainers remaining on the Nifty. Maruti tops the chart with a percent gains, 16,267, continues to move up at record levels. Trent, Eicher, NTPC, JSW Steel as other stocks that are still holding up into the green. These are the only handful stocks on the Nifty that are managing to pull up in this weak setup in the market. Let's see whether the tide turns and the sentiment improves as we go along as well. Remember, tomorrow again will be the Sensex expiry, so it's the sandwich day. We'll have to see how things pan out in trade. Do stay tuned with us on to Business Today Television to track all the market moves with us. And of course, in case you have questions about the stocks in your portfolio, ask them away on daily calls. That comes in at 12 noon. I'll be back with top 2 market experts guiding you on your stock queries on daily calls.
Durga Puja, a festival of devotion and art. When streets across Kolkata see pandals coming up.